Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, October 30th. We're going to start off with a one-year view of the Dow daily. And, after this almost 1,900 point rally we've had over the last 3 weeks, essentially, we're going to look back and see what we're actually looking forward to over the next several weeks. And this is the scenario right here that I'm hoping we see going into the new year. This was last year's rally, sparked by Europe kicking the can down the road and the Fed announcing their QE2, and we essentially went on a 3,000 point move between September and late January, early February. Right now we're up 1,800 points. We're above all the moving averages. But what we'd want to see happen here is, check out stochastics. We're holding above the 80 level. Actually, let me scroll down more. Right now, when we had those big runs over the last year, we saw stochastics pretty much trade, between the 70 and 80 level for 3-4 months at a time. So that's what we'd be looking to see right now. If you look at the chart, we're only 600 points from the recent highs before Europe made its appearance and then the big plunge after the teabagger fiasco in D.C. Now, we do have that to look forward. Well, look forward to is probably a bad choice of words. Here in about 3 weeks' time, when the idiots in Washington tried to come to an agreement on the deficit reduction with the super committee, we're probably going to see more of the same. But I think any threats of downgrades from Standard & Poor's again would merely serve as retrace excuses for the market and not see this plunge that we've seen over the last couple of months. This now will count it as the European debt crisis and teabagger stupidity and sort of ignore it is what we're going to do. If we do ignore this plunge and look towards that 11,800 area, that would be where I would hope support would hold on this market. And as long as we hold above that area, which, we've got a lot of moving average support below us. We've got the 200-day moving average just below us right now. But essentially the 20-day exponential, right now that's at 11,600. We'd like to see that one hold on any retraces in the market. Let's check out closer up view. You can see where we've got all the moving averages now curling higher. The 50, the 20-day, we're riding the 8-day moving average, and that right now is at that 11,800 support area that I've mentioned. Pretty interesting week this week. We've got a 2-day Fed meeting coming. Fed is going to do nothing, and actually, if they do nothing and say nothing at this meeting, the market might view it as somewhat positive given the 2.5% GDP report we had come out this past week. 15-minute chart, you can see we've been riding that support line essentially from the early October lows, and we just continue to move higher. Now keep an eye on just to see if it follows through again. You see the MACD cross. You'll recall if you've been watching these videos for any amount of time, I love seeing strength at a positive MACD cross on a Friday going into Monday. Typically it sends us on at least a pop on the open on the Monday, barring any sort of Europe news, but we haven't had any news flow out, so we likely won't have that excuse. So just looking at the 15-minute chart, we should have a pop tomorrow. Russell Index is finding some resistance at the 200-day moving average, but this is a market. Remember, going back to the daily chart, we're 600 points from the highs on the major indices, and we've got so many stocks trading at 50-75% discounts to the highs they had earlier this year. Lots of opportunities in small caps, especially given that the economy is not going into a double dip. You will see the funds start to chase performance into year end, just like we saw last year. This is the exact same scenario we saw last year this time. Funds stayed on the sideline. They had poor performance. Then we had that huge rally into year end as funds chased performance and traders got greedy looking for gains. We are setting up for a similar situation going into year end this year as well. SMH, very nice breakout here, right at that resistance level, 33. I would not be adding any SMH unless we saw a big dip or one of those, low volume opening dips in the market, or a big, news stupidity event with Europe back to that 20-day exponential. Otherwise, I would just be trading the little intraday moves. Let's get into some stock plays, though. That's what we're here about. Fantastic week over the last week. Actually, fantastic month for the buy-sell short plays. If you haven't been in the chat room or watching the videos, you have missed out on some fat gains over the last month. We continue to nail this market, and we'll continue to do so. This is our kind of market right now. CYTR, we've been patiently waiting on this one. Actually, if I go back and look at all the trading alerts we've sent out over the last 3-4 weeks, almost every single one of them has spiked, and spiked about 20 to 50% on average. CYTR, we worked off some of that overbought condition on stochastics, and now we look ready for a move higher. ADX is starting to curl up and build some strength. We're starting to see unbalanced volume peak out of the basement. And again, this is a stock, once it breaks 40 cents, you'll really start seeing people trading this one. And there is no reason why this cash-rich biotech stock cannot make a big run back to its 200-day moving average, all the way almost 100% higher. 37 cents is the breakout on this one. 40 cents will really bring the buyers in. And actually, as I was looking over this stock this weekend, you know what this stock reminds me a lot of? You recall DEJ earlier in the year. We were buying this one 31-29 cent area, waiting for a big move when all those oil prices or all those oil stocks were on a big move. And I said, patiently wait. And we essentially sat on this one for almost a month waiting for it to go. And then boom, stock went up 75% over the course of 3 or 4 days. That situation really reminds me of what we're seeing right now in CYTR. I love the setup here. Cash-rich biotech stocks. I mean, we've seen some big moves. ANX, 25%. CYCC, 75%. NSPH, that hit $1.58. Let's look at that one on Friday. NSPH, 158. We were buying this one down here, 95 to $1. Almost a 60% gain over the course of 3 weeks. So these cash-rich bios are doing very, very well, and there is zero reason why CYTR, this could be the week. The chart indicators are coiled, a nice bit of positive news, and we could be off to the races here. DEXO, this is our little small cap play on the Groupon IPO expected this week. Breakout is probably going to get 75 cents will really bring them in. We're looking for 86 to 94 cents or more on this play. It got a lot of action earlier in the year when Groupon, the Groupon IPO at the start of the year was getting some big hype. This was one of the stocks, along with LOCM, that was getting some interest. LOCM, since we mentioned it in the chat room about a week or so ago, is up almost 25% since that call. So traders are really starting to move into these plays ahead of the IPO, and this is an under $1 play that should definitely get some action. MVIS, nice breakout on Friday, 81 cents. They had a press release out late Friday that they got their delisting notice or delisting warning. Actually, let me change that. Stock under $1 for 30 days warning with a 6-month extension. A meaningless press release. So if you're looking to get into this one, 80 cents and under, I would definitely be buying from stupid sellers early Monday if there are any. There was a couple of dumbasses on Friday selling that news, but there's always a couple of dipshits in this market. Take the shares from them, sell it back to them when it makes that run to $1. Nice breakout on this chart. Positive ADX cross. Stochastics up over 80. On balance volume curling up. Stock hammered. No reason why we can't get a 25% move on this one with small caps really starting to heat up. ZHNE. I love the setup here. Posted earnings, stock has been decimated during the sell-off. I mean, this stock was trading in the 2s before the market started to implode back in July and August. Here we are, back down 66, 70% drop. They had their earnings report last week. They said they're going to be posting their first profitable quarter And here is a stock down massively. We've got a breakout. $1 is where they'll really start to chase this one, and it's pure IKAN with a hell of a lot worse fundamentals, is up 30% over the last couple of days, and this stock has always traded at a higher market cap than its peer IKAN. Positive MACD cross on Friday, which we love to see. Stochastics in the basement and unbalanced volume curling up. I really, really like this tech play for a move back to the 50-day moving average at least 120. And this is one, if this rally does exactly what I think it's going to do over the next several months, this is one we can see trading up here, up in the $150, $2 range several weeks from now. DYNT, love the setup here. Tried to break out on Friday on decent volume, retraced it all on zero volume on Friday. I am a buyer around the 20-day exponential or under 75 cents. We're looking for 92 and 110 here with minimal downside on this profitable small cap tech play, like the setup that we're seeing here. These are the kind of setups, stocks that are down big in small cap land over the last 2 months. We're going to be looking for easy moves back up. Another one, WEBM, Web Methods, again, decimated through the summer. Very nice bottoming action. A move back to the 80 to 90 cent area. Very, very possible and very easy given how quickly the stock can move. RSI breaking up through 50. Positive ADX cross. Stochastics look good. I like the chart setup. Would be a buyer on any dips under 60 cents. Last but not least, the China junk really started motoring over the last couple of days, especially on Friday, especially the ones that have been hammered. Here is a nice little bottomed out China play. Breakout, 94 cents a 20-day exponential, but really a move through $1, and they'll start chasing this one up to a gap fill up at 120 to 132. All the indicators are nicely bottomed out right now, and this is a stock that you could, and actually if you go back and look at the chart, it's not uncommon for this stock to run 25 to 50% over the course of a couple of days. Look what it did back after its big sell-off in June. It had a run it ran 200% in early July, ran big in mid-March. We ended up going up 50% in mid-March. Here we are back down here again on a stock, a China play that if it gets the volume, will really get a nice little move. So we've got some very, very nice setups. Also, definitely check out the popper scan for this week. There's a lot of stocks on it, but a lot of great bottomed out plays. So definitely go through that list. Check them out. The pop scan. Some days, there's at least one big winner on those buy lists every single night. And some days there are multiples. On Thursday, we had 5 or 6, 10 to 20% movers. Friday, we had a couple almost every day. So definitely check out the pop scan list. Any questions? Feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. We should be in store for a nice little small cap rally into year end.